After having discussed about subscriptions, about consumable funds, and previously we have seen also the specific funds, now we will discuss about capital funds. What is a capital fund? This may be also referred to as the general fund or accumulated fund, because this is a fund which enables any organization, especially these kind of not-for-profit organizations, to function. They do need a capital. So how do they get this capital fund? That is what we are going to see. Capital normally appears, so we have also learned the previous chapter where we worked out statement of affairs, and we used to show capital, whether it is opening or closing capital. In the assets minus liabilities, we show normally as capital. So this will appear in the liability side of the balance sheet. So how do you arrive at capital fund? Or normally it is called as an opening capital fund, because with which only we can proceed after to make certain calculations and we arrive at the end value. So the equation goes like this: opening capital fund is equal to assets at the beginning minus liabilities at the beginning. So assets minus liabilities, as I already told you what we have discussed in the previous chapter. Now what is this specific fund going to be like? Now, along with the specific fund that has been arrived after deducting the assets and liabilities, that is liabilities from assets. Next what you do is you will have to consider your income and expenditure account. You must consider what your income and expenditure account. This income and expenditure account, if you see, this income and expenditure account would have had a value like surplus or deficit. Normally what do we do in income and expenditure? After posting of the transaction, you find the difference, and you either get a surplus. What is surplus? Excess of income over expenditure is surplus, and if it is deficit, it means excess of expenditure over income is a deficit. So along with this capital fund, we add the surplus or we deduct the deficit. So I would like you to just recall one small fact, what we normally do in the final accounts. What is final accounts? It is a statement of trading and profit and loss account. If you get a net profit or net loss, you take that result, and you start the profit and loss. Profit and loss account will give you a net profit or net loss. What do you do with that result? You bring that to balance sheet. In the liabilities part, you will find capital. Either you add net profit or you deduct net loss. The similar thing only we do here. The capital fund which you have ascertained like this, what you have ascertained like this, now you will take that to the liabilities part of the balance sheet, and what you have to do is, if there is a surplus from the income and expenditure account, you add, and if there is a deficit, you need to deduct. Please follow closely. Now what else should we do? Now this capital fund, as I told you, this also like specific fund will appear in the balance sheet only. The previously we discussed a specific fund. Now this is capital fund. This also will appear in the balance sheet. Balance sheet will take two sides, namely assets and the liabilities. So what all will come in the assets? Now we are going to see the transactions in general. So now in the assets part of the balance sheet, on the assets side of the balance sheet, comes the cash and bank balances. We call this as the debit balance of cash and bank. If there is a credit balance, how do we consider this as bank overdraft? So if the bank shows a credit balance, we call this balance as bank overdraft, and it is taken to the liabilities part of the balance sheet. These are all simple and what we have already learned previously. Next, what you have to do for assets. Now in the assets part, you have to actually consider certain we call as certain adjustments or certain kind of transaction. Now assets of the previous year. Suppose they have given you previous year details, previous year or the beginning of their details. So those assets will have to follow also in the current year. Okay, let me make this very clearly to you. Those assets have to follow in the current year's asset side of the balance sheet. What are those assets? Very simple. Those assets are nothing but like, it could be like furniture or machinery or like that. So if a furniture value is recorded in the previous year as 50,000, after considering any adjustments, if adjustments are there, you will like depreciation. Okay, after considering adjustment like depreciation, okay, you will have to show that 50,000 in the current year too. That is what this statement mentions about. Now, when there are assets that have been included or newly purchased assets, how to know that? You can refer that in your receipts and payments account. In the receipts and payment account, you will be finding out that there are some assets newly purchased, because that is pertaining to the current year. So if there is any purchase, you have to add it to the actual assets value, previous assets value. Along with that, you need to be you need to add this. And if there is any sale of asset, that also you will find in the receipts and payment account, that needs to be deducted from the actual asset. So as we gradually move into the problems, you will understand this step better when we work it out. But make sure you need to adjust for any depreciation. This amount of assets have to be adjusted for depreciation. So how can you know if there are any purchase or sale? Very simple, as I told you need to refer to the receipts and payments account that will be given as your question. Now next, thirdly, what you have to consider. Now in the asset side, this you are familiar what you have done in the final. This is something very familiar for you. If there are any prepaid expenses, any accrued incomes pertaining to the current year alone, that you know very well. Current year's prepaid expenses, or we call as a paid in advance, no. Or if there are any accrued incomes, that will be taken to the asset side. Similarly, in the liability side, if there are any outstanding or unpaid, okay, outstanding can be mentioned as also unpaid. So if there are any such outstanding expenses, and if there are any incomes received in advance, so there is one expense, one income for liability. As there is an asset, you have one expense, one income. Liability too has one outstanding expense, one income received in advance. That also make sure it is for the current year alone, will also be appearing in the assets part of the balance sheet. Okay, so next will be about these specific funds, what we have discussed in the previous topic. Okay, so that also you know very well, specific fund is a liability. So specific funds or specific fund, as I told you already, it will be in the form of three types of funds: tournament funds or match funds, or it would be in the form of prize funds. Any of this, you make sure they are specific special funds, and this will be shown separately under the heading called specific funds in the liabilities part of the balance sheet, liability side of the balance sheet. Okay, what do we do? Any incomes means we need to add it, any expenses need to be deducted, you know very well. And if there is separately any investment relating to specific fund, I told you we will show it in the asset side of the balance sheet. All this we have discussed in the previous thing very clearly. Now in short, let me conclude about this capital fund. So we have discussed separately, so it might confuse you. So I have just put all this together under the heading assets. So relating to capital fund, what are the items that appears in the assets, or we can say in the balance sheet? Okay, not capital fund alone. In the balance sheet, what all items will appear for a not-for-profit organization? Okay, for a not-for-profit organization, what are the assets items in the balance sheet? First, as I told you, the debit balances or the normal balances of cash and bank. Secondly, if there are, so let me also take side by side to the liability. If this is a debit balance, What happens if there is a credit balance or is the so-called bank overdraft? Very simple, it will come to the liabilities part of the balance sheet. Let me show that also right here so that you will understand. It's a comparative thing regarding the balances of bank, because cash balance, it always shows debit balance only. Only when it comes to bank balances, you have debit and credit balances. All this you have learnt in your 11th standard itself. Now next thing to be shown to the assets, the taking the asset is from the previous years balances. If there are any assets, okay, showed there like furniture or machinery, etc., we have to also bring it or show it in the current year's balance sheet. That is an asset side. But make sure that depreciation has to be adjusted. Depreciation has to be adjusted means it needs to be deducted. Okay, minus pan only a number. Final account, the same thing. How to know if there is any additions or sale? Additions means purchase, or if there is any sale of purchases. Because if there is an addition, as I told you, that means purchases which needs to be added. If there is any sale of asset, then it needs to be deducted, as I already told you. You have to refer to what? To your receipts and payments account. Only if you see this, you will understand, okay, there is a sale or a purchase that has occurred thereafter. Now the next thing that will be without fail taken to the assets part of the balance sheet is this: prepaid expenses and the accrued incomes. Please don't forget that, the prepaid expenses and the accrued incomes. And okay, alongside, let me show you the liabilities as well. So in the assets we have seen prepaid and accrued. So what comes in the liabilities? It's about outstanding expenses and incomes received in advance. So as I told you previously, one expense, one income. Then finally, regarding that specific fund, any investment relating to specific fund is an asset. But in the liabilities part, okay, you should remember that along with the specific fund given, you have to add any incomes or any interest for that year. Okay, any incomes or any interest on this investment. Any interest on investment, it will be taken to the liabilities part as an addition. So any expenses in that fund needs to be deducted. Okay, so this is how this particular balance sheet will appear.